Okay, everyone, so welcome back. And today I want to talk a lot about my experience over the last 3 months while trading on the higher time frames. So I'm going to give my input based on the difference between my psychology or my thoughts behind being a swing trader versus a day trader or intraday trader. So, a couple things. Over the last 3 months, I had some annotations, and that is trading on higher time frame, like the daily and weekly, require less trades being taken, which is great. And when you're putting yourself in position to trade less on a weekly basis, um, what happens is you become more patient and you expect less out of the market. So there's more patience involved. So you start to learn more about your patience and you implement more patience. This is also a factor that can help you understand more about yourself, more about your psychology, is patience. Um, I learned more about candlestick patterns like the open, the close, the highs, and the lows. This is something that was a bit hard for me to accept because you have to almost submit yourself to the markets. I don't know if that makes sense. Like there's certain things that happen in the market. It's almost like saying like um I can't buy or sell in the market. It's like then what can you do if you can't buy or sell in the market? There's certain things. And when it comes to um open, low, open, close, high, and low in the markets. I learned a lot about that because closes are the most important things. Closes are the most important. Closes of a candle on that time frame is a specific is a it's almost like a cheat code, but we all know that trading is gambling. But the deal is to take calculated risk so that you can become profitable, and obviously you have to have a good edge. Let's see. The higher time frame, I said it allows you to cipher through a ton of different pairs. So I think the the great thing about trading on the high time frame with me was that I had a good amount of time to leverage so that I can flick through which pair has a greater setup than this one. So let's say if we're looking at two different JPY pairs, can say, hey, GBP, JPY on higher time frame looks like there's a setup and it looks better than the USD JPY. So both have a selling opportunity potentially coming up. And you're more so taking like a cleaner approach to like the cleanest one. You're only gonna trade like the cleanest setup, which you can probably I mean you can probably do that on lower time frame, but I just think it's gonna take a lot of time to, you know, do that on just lower time. I don't know. I don't really focus on the lower time frames, so I can't really say too much about it. Uh Missing out on good ratio setups. So we all know that ratios are important in the trading industry. Um, and I'll show you why it's important. Okay, so here's my screen. The reason why you need a good ratio is because if you look at this, let's say you have taken one, two, three trades on a $500 account. So what happens is, let's say your ratio is 1 to 5. So you have a 1 to 5 ratio, meaning if you lose and you're trading fi and you're risking 5% of 500 is $25. So let's say you lost both of your first two trades for the day. Now that's negative 25, and there's another, you're down another 25. But your third trade that you've taken is a winning trade, which means now you just won 125. So that's 125 minus 50. 125 minus 50. Your profit is 75. So you profited 75, which means now your total is 575. And then as long as you keep this parameter, like you just stay consistent with this parameter, within this parameter, then you should be a profitable trader. There's no reason not to be a profitable trader. Oh, this kind of looks off. Okay, this is your total right here. So the ratio is what's important. And the reason I say that you're missing out on a good ratio setup is because um you shift to a, let's say, this is one of the ones that I missed this week. And I'm like, okay, like over the past few months, I've been realizing this. And I'm like, I seen this setup on US 30 this week that I should have taken, but I didn't, because I was more focused on the higher time frame setups. And they're good quality setups. This trade right here, I was thinking about taking. I seen it, and I'm like, and then just look at that. That's a 1 to 5. So I'm like, it could have, you had a potential to be like a 1 to 6. But it's a 1 to 5, almost a 1 to 6. And it's like sometimes I find that I wait on the higher time frames, looking at trades, potential trade setups, or I wait for a potential opportunity in the market to present itself for a good whole week. And my thing is, why not just start taking trades um into the direction that I'm looking for on the higher time frame, if that makes sense. So like let's say for example, I'm expecting US 30 to climb all the way up to around this area because there's a lot of imbalance in the market where price would normally fill above 43,000. I'm expecting price to come between 43,000 and 44,000. So if I'm expecting that and the 4 hour is indicating that we're moving up, so we're creating higher highs and higher lows, this would be a move right here, here, here. So what could happen is price could just continue to go up to this area. But despite these minor pullbacks, a lot of times there's opportunities like this one presented where you can catch a good 1 to 5 to sometimes a 1 to 10. You know what I mean? Like, mm, let me see. This. How much is this one right here? About a 1 to 5. Okay. Yeah, so like you don't want to really wait all week to catch 1 to 5s. Like, and then another thing is that I found that if we look at my prop from accounts, this is the last prop from my last eval that I took where I passed it. And like, yeah, I didn't get anywhere with the second account that I got, but the thing is, these were on smaller time frames. All six of these accounts that you see here, these eval accounts that you see here that I passed, I was always trading on a smaller time frame. So I might consider, I'm definitely going to consider focusing more on both smaller time frames and higher time frames. Another thing that I'm changing is the pairs that I'm going to be looking at. So I'm going to still keep these US, a dollar index, euro index, JPY index, so that I have a directional bias also as a confirmation. And I'm also going to keep these important pairs um here. So it's not too much going on. I'm still going to be focused. Like my main focus are having high ratios, having high low risk, high rewards. Another thing that I mentioned is that the possibilities of the market turns against you. The possibilities of the market can turn against you, and play with your psychology of staying in the trade. That is 100% true. So you can find yourself trading on the higher time frame. You can find yourself waiting the entire week for this one setup to happen. When that setup, when the market comes to your area of interest, and then you see, let's say you see a market structure shift or whatever type of entry that you normally take, or whatever type of entry setup that you take, the market still has the opportunity, uh, still has a chance to go in the complete, just go in the complete direction, just hit your stop loss. So you could have waited the whole, let's say you spotted this opportunity Sunday when you were doing Sunday markups, and then price came to your entry point or your area of interest around Thursday. Now you have some confidence, right? You don't want to have ever too much confidence in a trade, because if you have too much confidence in the trade, then it's you're not it'll throw you off. So you waited all the way until now Thursday comes and market's around your favor. Boom, you see your market, your entry setup, and then you go to sleep, you wake up and it's Friday and price just completely goes directly into your stop loss. So it's more when I think it makes sense when you have the time to trade, you have the time to pay attention to the markets, and you're not busy. I would say the lower time frame, like the daily, 4 hour, and 1 hour and under, it makes sense to trade those time frames because it is it's it makes more sense for someone like me that currently has a good amount of time to wait for, the opportunity on the lower time frames to happen to capitalize, getting in and getting out. And I definitely see the growth between the time that I did start journaling, and which was the early January, and now. Because if you look at the difference, I it's like, I'm not gonna really say night and day, but I see a difference. I see a difference. Um, like look at the amount of trades that I was taking on a weekly basis. Like I was taking like 60 trades a week, maybe 50. I might be dragging it, but around 50 trades per week. Now that dropped down to 3, 6, 9, 12, 13, 14. Okay. I think that's 14. Probably 14. Really want to get too much into it, but yeah. Uh, about 14. So just imagine that's about a 75% uh drop. That's a drastic decrease, and that's a good thing because you want to trade less so that let's like you don't want to be in all like three different trades for three different pairs because that unless like one is running in the back on a high time frame and then maybe two is running back on a high time frame. So, you got a entry on the weekly time frame on one pair, another weekly entry on the other, and then this third one is a daily trade that you're taking, you know. But besides that, you don't want to be day trading three different pairs, especially starting out. It gets uncomfortable. It plays with your psychology, and your psychology is the most important part when it comes to trading. Nobody else is gonna think for you when it comes to trading unless you're paying for like signals and stuff like that. But even then, if you are paying for signals and stuff like that, I think everyone should learn the markets, learn themselves. And the unfortunate the unfortunate thing about it though is that sometimes it's not that healthy for you to learn um too much because sometimes there's like brain overload which can cause you to either not take the trade because you might convince um yourself that you might convince yourself into reasons why you should not take the trade. And that's a bad thing to do, because that's obviously closing doors for opportunities that you could potentially take. And you don't really want that to happen. That's happened to me before. And it's probably happened to most of you. So, this is March. This is how March looks. Not a good look. Negative 1500. Win rate 23%. Doesn't have to be huge for a win rate to be profitable, but here's how we look. I hit my personal record for taking the least amount of trades or hitting my goal for the week. Because I've been aiming to take less than 25. This might have been less than 25. This might have been less than 25. But my goal was to bump my numbers back down because they did get higher. As you can see, this day I traded like 20 times, and that's bad. So we're on that. Look at that. Took less trades, and so less trades in that week, less trades in that week. So, yeah, that's pretty much, okay. Yeah, that's really what I wanted to say for the higher time frame. Next, for the lower time frame, my annotations on the lower time frame before this year started, I compared, for me to compare my thoughts is on the lower time frame, the move happens much quicker. So moves happen much quicker. It's more of an in and out, which is great for your mindset, I believe. You just have to know when to step away from the markets because just because you just are up 200 doesn't mean you should get back into the markets and trade again. And convince yourself that you're on a winning streak and then convince yourself that every trade that you take is going to have a winning outcome in the end. So moves happen much quicker on the smaller time frames. You know whether you're wrong or right sooner, which is pretty similar to the move happens much quicker. And the risk to reward more times than not are higher than if as long as your system is trading from highs to lows or lows to highs. So yeah, if you're trading, highs to lows, lows to highs, many times you'll find that the risk to reward is worth it. And I personally look for trades or ratios that have a at least 1 to 3 ratio. And if it doesn't have at least a 1 to 3 ratio, you're not gonna find me in the trade. You should focus on specific pairs, have a smaller amount to minimize noise. So if we're looking at lower time frames on each of these pairs, I would say like pairs or sm any small time frame that I would consider is 4 hour and under. So anything under the 4 hour, I would consider is the smaller time frame, which is what I would now start focusing on. So that is pretty much that part. And common problems that you could face between trading on both the higher time frame and the lower time frame is slipping up and buying GBP and selling Euro USD, for example. So let's say, I mean, this is something that I had put in my annotation. I don't know. Let me know what you guys think in the comments. So I said, like, let's say you see a buy opportunity on GBP USD, but you see a sell opportunity on Euro USD. Many times these two pairs, they move in the same direction. But you might have, let's say, forgot that you were in a GBP USD trade, and then you, sold this Euro USD trade. So now you have two different trades with two different directions that have two similar, or two of the same pairs being traded, which would be the US dollar. So this happened to me this week. I was in an NZD JPY pair, NZD JPY pair, trade, and there was like confusion. I deleted it from here because I wanted to clean up everything and make it more focused and narrow down my attention to just some pairs that I find good results on personally for myself. So there was an NZD JPY pair that I took this week, and I also which was a sell, and I saw an NZD USD opportunity. So I took this sell on NZD JPY, then either later on the same day or the following day, I, yeah, it was probably the following day, I seen an NZD USD sell opportunity or buy opportunity. I ended up taking the buy opportunity, but I'm like, I'm currently in, and then I thought to myself, I'm currently in sells for NZD, which would be the NZD JPY pair that I was in. But I just bought NZD USD. What are the odds of price buying on the NZD JPY pair and the odds of NZD USD selling? So I was like, see, I don't want to be wrong twice about NZD. So let me just get out. I just got out because now my psychology started being messed up, and that's something you do not want. So to avoid that, I encourage you guys to just stick to one direction. It's almost like pick a side. Uh, you know, either trade GBP USD or trade Euro USD. Don't trade both. It it's not it's not worth it because you never know. You just never know who is in the market. And I've learned this from Mark Douglas. You never know who's in the market. It takes one person to have a higher belief than people in the market in that specific, commodity or FX or, you know, anything like that. It takes just one person to have a higher belief in doubling down on this pair for price to go in the opposite direction of your directional bias. So i- if you guys have any questions, comment. I hope this was valuable, and again, like, comment, subscribe, all the good stuff that you guys normally do. I hope with this was helpful, and I will hope you guys have a good weekend. It's Saturday. I'm gonna do some I'm gonna do some markups, and I think I marked up, what did I mark up? So this is one of mine that I believe that could happen on gold. This is the 1 to 3. So I'm showing you guys a setup that I'm gonna take most likely this week, as long as price does what I think it's going to do. And feel free to look out for it, whether it happens or not. Um, it's a 1 to 3, so it's definitely in my field of what I'm looking for. It's almost like I almost want to say like I specialize in opportunities that give me a 1 to 3 risk to reward at least. That's that's a fire statement. I'm gonna leave it here. And thank you guys for watching.